I do think in the near term, stocks are probably building, particularly I think October, November are the risky months. You've obviously got refineries going down for maintenance, which always happens. We always get bills, but I don't think OPEC would have liked to see these bills, given just how much. We built nearly 1 billion barrels of crude oil between January and May, and we need to run that down. This small hiccup does mean that we don't run down that inventory buildup for the first 5 months of the year till the very late, like the end of 2021. We could have otherwise run it down by mid-21.
We'll stick with the supply side for the moment. I'm very interested in the demand side as well. But in terms of the mechanics in the market, Amrita, you study these a lot more than most people as well. The weakness of the dollar has artificially kept the oil price higher than it would have done otherwise with these dynamics, hasn't it?
Absolutely. I mean, honestly, if you look at the contango in the market, that is actually incentivizing floating storage. It tells you how weak the physical market is. And had it not been for the dollar, we would have been $40 or below $40 for Brent a month ago. And we finally gotten there. We need this because we think at these price levels, US production growth will slow down again. Obviously, OPEC Plus moved to phase 2, so you do have extra production from them. There needs to be more catch-up cuts from those countries that haven't been complying. I mean, only then can you really bring the market back into deficit. We think we'd probably get there for late November, December, but yeah, we do risk 2 months of builds, which does just derail the rebalancing, at least in the short term.
Amrita, I don't think you and I know one IOC out there that plans to grow their oil and gas production, certainly their oil production, over the coming months and years. In fact, if anything, they are desperately trying to seek new energy solutions, as we've seen with the majors here in Europe as well. Does that touch the sides on the amount of oil that could potentially come onto the market and, as such, create a longer-term supply deficit, regardless of the energy transition? Are we potentially setting ourselves up for energy price spikes because of the lack of new production coming online?
100%. I mean, I don't think there is any doubt in that. I think one of the things you're seeing, in any case, even before the virus, right, IOCs were moving away from oil. It was ESG, it was focused on, renewables and all the other bits and pieces. Now, because of the virus, the uncertainty around demand, that's just moving forward even quicker. I think what you are going to see is more and more oil production sit with the NOCs, the likes of Aramco, likes of Russian companies going forward. They're the only ones who will invest. Even now, other than Russia, nobody really is investing. I think around 2022, you are staring at a massive deficit. I really call into question whether oil production can go above 97 million barrels per day at these price levels. People are talking about peak demand. I think you're going to hit supply blockades a lot quicker than that.